Hello everyone, today we're gonna discuss Clif High or Webbot predictions. Stay tuned. This past week, 26 million people watched the annual Grammy Award. This Sunday, another 50 million will be watching the Oscar of 2017. What it tells is, here we love talented people. So let's talk about them. Today we want to discuss another talented person. His name is Clif High, and he came up with the predictive linguistics, a Webbot report. Clif High recently shared an amazing information regarding an upcoming 2017 crisis, the collapse of the economy. Let's listen.
Indications in the data are that we'll be discussing that not just you and I, but the more general population will be discussing the idea of a Dow at 125,000 some point later on this year.
If you're asking if you heard it correctly, I say yes, that's what Cliff said. Dow at 120,000. So let's say if you have what is called the TSP plan, thrift savings plan, or something like 401k or 403b for non-profits, so you are playing a higher risk options. Now you're telling yourself, as Dow is hitting 21,000, at the end of the year it will be 120,000. So what it means to my plan, my 40,000 is going to be nothing but a quarter million. Isn't that amazing? I think this music says it all. Then Cliff talks about hyperinflation. What am I missing here? Hold on a second.
And so it's pointing to hyperinflation. And the hyperinflation we see in the report really appears as a result of the chaos we go through that's indicated from March through May, as a bunch of currencies go into crises and a bunch of the percolating pots of crises and coffee all come to a boil all at once in this 3 or 4 month period of time. And then the response by the Fed is basically to, I guess you'd have to say, abandon the dollar or not support it anyway, and let the dollar be totally debased in order to try and support the system as a whole. The mechanisms are not showing in the data sets. It's not like it's an organized plan or a playbook, but we get some hints as to what's going to go on. So my response is that what I think will occur is that any interest rate raising is going to be meaningless in the vast amounts of quantitative easing, which basically is debasement of the dollar to a huge level, and the subsequent currency crises would make sense under those circumstances.
Some of you may remember what happened in 2008. Dow slides below 8,000 to 98 level, triple-digit loss for third day in row. The story continues. The Dow Jones Industrial plunges below 8,000 Monday for the first time in nearly 4 years, as investors remain too preoccupied with scandal and earnings fear to shop for bargains. The drop continued, the brutal sell-off, and the past 2 weeks punctuated by Friday's 390-point fall, the biggest one-day drop the year of 2008. And investors have coined a new phrase for the relentless declines, irritational depression. Let me say it another way. Let's say if you had invested $10,000 in the Nasdaq, and we are in the year of 2007, so a year later, your portfolio would be worth just over $6,000, which is nothing but a 40% loss. If you had invested the same $10,000 a year ago, again 2007, in an S&P 500 index, that fund would be worth just over around 6,700, which is 33% loss. Now, some of you may think, yeah, but I have very good companies. Well, WorldCom was one of them in 1999. If you had invested $10,000 in WorldCom when the share price was $60, your $10,000 investment would be worth about, guess what, $28. That's another 99.80% loss. If you would invested $10,000 in the company called Enron in the November of 2007, a year later, your $10,000 investment would be worth just nothing but zero. Yeah, that's another 100% loss.
At a macro level, we've been living under an illusionary veil of lies from economically for at least the last 40 years. I mean, ever since we got off the gold standard in the 70s, really, it's all been lie it, fake it until you make it kind of stuff, and lie it into existence. So we have to go through a slap in the face from reality, as the people in India, for instance, are doing at the moment with their currency issues. And as we go through the currency crises, those things will show up. We'll have ATM shutdowns, we'll have riots in the food stores, Venezuela-type period of time. It may lead to individual states having to call out National Guard in order to restore order. The chaos that we're going to go through, I think, would be more representative of the 1918 period of time and the rejection of globalism then, and the outbreak of new ideas and so forth that led to the Roaring '20s, than in fact the many people saying we're actually echoing 29 and that kind of a crash. So yes, we're going to go into a depression, I think, and not a recession, but a real actual acknowledgement of a depression as the currencies come unwound. And it's going to have huge ripples in our society, because so much of it is built on, well, all of it is organized around a currency that is based on debt. The currency is not based on wealth, it's not based on growth, it's only based on debt and the continuing assumption of more debt, which equals a Ponzi scheme. And once you get to a certain stage, all Ponzi schemes collapse.
I'll tell you this, there's a 0% of chance that they are going to reduce the taxes. And the reason is simple. It's our national debt, which is like cancer growing day after day. I know many are looking for signs that will tell us the dollar is now on its way to collapse. Historically, when a nation's debt exceeds its ability to repay even the interest, it can be assumed that the currency will collapse. So look for that sign. I know many people like James Rickards are telling that one of the signs is the collapse of the Saudi's currency, which then will lead to the collapse of the dollar. And the reason is simple. The reason is petrodollar. But what happens when any currency crashes? Usually the state often tries to float a new currency, and sometimes it's accepted, sometimes it's not. Generally, the people of the country and those trading within the country move immediately to the next best thing. And in 2009, when the Zimbabwe dollar crashed, several currencies were used, but the US dollar was the clear favorite, as it was the world's reserve currency, and therefore the most spendable currency. You own US dollar, you're good. What happened though, the Zimbabwe's government didn't like the idea of using US dollar, because it was very bad for their economy. So today, many currencies that governments of the world using are nothing but fiat. One day they are going to expire. And I'll give you this international reserve currency list since 14th century. So from 1400 until 1530, to be more exactly 1450 through 1530, the world international reserve currency was the money of Portugal. And then, after this currency collapsed, Spain's currency became the next, and it lasted for about 110 years, from 1530 through 1640. What's interesting, this currency also collapsed, and then the money of Netherlands came from 1640 through 1720, and then it also collapsed. Then France came with its currency from 1720 until 1815. As you may guess, it didn't last long, around 95 years. From 1815 through 1920, Britain's currency, the famous pound, was the international reserve currency, and this was for about 105 years. Now, it also collapsed in the year of 1920, and since then, since 1920 up until our days, 2017, the US dollar remains the world reserve currency. But looking to the list that I just explained and described, we have maybe another 3, in the best case scenario 5 or 8 years, and right after that the US currency may collapse as well. Who knows which country will come next with its currency to be the leader of the world currencies. Gold and silver never changed. They were, they are, and they will be as part of our monetary system. I still remember the wonderful tradition among many families. When a girl gets married, the relatives buy all sorts of gifts, but what's dominating is jewelry. So the newly married wife is nothing but the secure bank of the family that owns real money, which are, yes, gold and silver, diamond, etc. Unfortunately, people are too confident today, telling that the US dollar will never collapse. It will never disappear. Let's remember that this country once was a creditor country, and now we have the largest debt in the world, nearly 20 trillion. Sometimes people listen this number, this amount, and get very used to it. To put in another term, it's like the United States decides to pay this debt with California. That's how big this debt is. And this debt is not possible to pay unless we default on our national debt. Before 1971, while it was backed by gold, no one had any doubts. But right after that, it is backed by nothing. Just a simple trust and faith and confidence. If this faith and confidence disappears, all is left is pounds of paper. So, what happens when the dollar gets devalued? Let's listen to another expert. and see what his idea is, which will be a catastrophe for the entire world.
I don't write these books and go through these scenarios and not provide some solutions. I think that's unfair and it may be a little irresponsible. So there are some things that can be done at the policy level to prevent this from happening. Again, just to illustrate this, I'll use a metaphor. So you're on a mountain, it's snowing, it's snowing, it's snowing. The snow is building up, a big snowpack is building up on the side of the mountain. And any seasoned mountaineer can look at that and say, that's going to turn into an avalanche. That's unstable, it's going to collapse. It's there for now, but it's inherently unstable, it's going to collapse, right? And then one snowflake comes along, perturbs a few other snowflakes, it lands the wrong way, they gather momentum, it becomes a chute, it becomes a slide, momentum builds, the whole thing rips loose, kill some skiers and bury the village below. That's the dynamics of an avalanche collapse. Exact same thing in financial markets. It only takes a very small initial event, maybe one Italian bank or Deutsche Bank, which would be a pretty big snowflake, or failure to deliver physical gold because there's a physical gold shortage in the world that becomes public and starts a gold buying panic, natural disaster, a political assassination, something. It could be a lot of things that are the snowflake. But go back to the avalanche. You go up in high ridge lines in Switzerland or Colorado early in the morning. What is the ski patrol doing? The ski patrol's out there with dynamite, shooting cannons and setting up dynamite charges to break up the snowpack. So what they're doing, as a physicist, I would say, they're descaling the system. They're breaking up little avalanches so the big avalanche doesn't happen, making it safe for the skiers in the town below. Now, bring that over to the capital markets. We should be descaling the system. That means, number one, separating commercial banking and investment banking. So in the U.S., bring back Glass-Steagall. That worked brilliantly for 66 years, from 1933 to 1999. Why on earth did the Congress in 1999 think that they were smarter than the Congress in 1933?
That's just amazing how skeptics never believe that market collapse is imminent. They're questioning the dates, they're teasing the people who are, among alternate media, talking about the issues and problems in our economy, this huge debt that our future generations, your and mine children, have to pay. But here comes another great answer. Let's listen.
I guess the main theme in that is that a financial crisis is inevitable. Mm-hmm. But what's the time frame for that, Jim?
Well, it's sort of like asking about the time frame for an earthquake. Now, let's just take, because the science is exactly the same. It's not just a metaphor. The unstable system dynamics of a seismic zone and earthquake, tectonic plates pushing against each other is exactly the same as the math in financial markets. Now, if we were standing in Florida and you said, Jim, when's the earthquake coming? I would say, maybe never. Florida doesn't have any fault lines. It's not seismically active. Imagine we're standing on the San Andreas Fault in California and you ask me the same question, Jim, when's the earthquake? I say, well, it could be right now. It could be in 5 minutes. It could be 5 years from now. So the scientific answer, I'm not just sort of throwing up my hands, we don't know exactly when, but what we do know is that we're standing on the fault line. It's dynamically unstable. The next crisis will be worse than any crisis we've ever seen. The reason is that, here's where the human to natural metaphor needs to be expanded a little bit. We're making the San Andreas Fault bigger by making the banks bigger, larger concentration of assets, larger derivatives books, greater interconnectedness. We're actually out there like making the fault line bigger, so the next crisis is going to be worse. What I say to investors is it could be a few years from now. It's unlikely we'll get 5 years. I mean, it's been 8 years since the last one. So these things happen every 7, 8, 9 years. You look at 1994, 1997, 98. Now, gold has a few headwinds, which are obvious. One is the strong dollar. When people say, is gold up or down, to me, gold doesn't go anywhere. I think of gold by weight. When I invest in gold, I'm like, okay, how much weight do I have, or how many ounces, et cetera. But most people think of it in dollars. So the dollar price of gold is inverse to the dollar. So a strong dollar is a lower dollar price for gold. A weak dollar is a higher dollar price for gold. So if you want to say what's going to happen to gold, you have to say what's going to happen to the dollar. Now, right now, the dollar is so strong, it's going to slow down the U.S. economy. By the way, it might get stronger, and the Fed's going to have to back off, as they did last year, and then sort of get in some dovish talk, and then gold could take off from there.
Okay, so, sorry.
I would say gold sideways for the next couple months, and then I would look for a rally, kind of at the end of the first quarter, based on the Fed backing away from the strong dollar.
How much of a rally?
It could go back, obviously back up to the 1300 level. That was a prior baseline. So, and then see what the Fed does. Now, if the economy goes into a recession and the Fed's got to maybe cut rates or give forward guidance or talk about QE4, then gold could go a lot higher. Eventually, my price target is still $10,000 an ounce. That's not based on Fed cycles. That's based on systemic risk and the intrinsic price of gold relative to paper money. Okay. Probably one more in March, but by then the dollar will be so strong, rates will be so high that it's going to be a major headwind for the economy.
If you enjoyed this video, do not forget to subscribe and comment below.